Testing, testing. Hey everyone. Thanks for tuning in nice and early. Right. I just want to check because we just installed a new mic. Are you guys able to hear me clearly? Okay. Okay, that's great. That's great. All right, then what I'll do next is I'll pass the time on to Ketan, right? And take you through today's live trading session, all right? And yeah, enjoy, guys. If you have any questions, feel free to ask him, all right?
Thanks, Desmond. All right, thank you, Desmond. Hi, everyone. Welcome to today's session with IC Markets webinar regarding the live trading session. Okay, hope all of you have had a great weekend, spending quality time with family and friends. All right, so off to a new week. It's a very big week we have in markets this week. Lots of central banks coming into play. All right, okay, but first off, here's the disclaimer. Of course, as usual, this information is not directed at residents in any country or jurisdictions where such distribution or use would be contrary to local law or regulation. And also, do take note of the risk warning that comes with CFDs. They are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Okay. All right. Okay. So, okay. My name is Ketan Rameshchandra. So I'm from analyst as an investment analyst at Everest Fortune Group, where we are partnering IC Markets to bring you this webinar series. Okay. So Everest Fortune Group has been the finalist for Best FX and Equity Research for 2019, 2020, and 2021. Okay, just a brief agenda before we dive straight into the charts. Okay, so the key economic events to look out for this week would be US inflation data, CPI on the 13th of June, Tuesday, FOMC meeting on the 14th, ECB interest rate decision on the 15th, and Bank of Japan policy statement or rate statement on 16th of June on Friday. All right. Hi. Okay. Yes, I see some familiar names as well. Hi, everyone. Hi, Adrian. Hi, AB. Hi, Jamilu. Welcome back, guys. Good to see you all here today again. All right. So we'll just start off with highlighting the main key economic events for this week, because central bank moves will once again provide the catalyst for currency markets, especially the US dollar, which would then in turn affect the other currency pairs naturally, and of course will also affect gold prices as well. All right, hey, hi Samuel. All right, morning everyone, and also good afternoon, good evening from whichever time zone you're tuning in. All right, so this is how we'll start off today. So let me switch over to right. Okay, so here I am on Trading View. All right, let me just go into the 4-hour charts as well. Hang on, sorry. Okay, if you're on the 4-hour chart, let me maximize this and remove the watermark so it's more clearer. Okay, let's just. Okay, we can always turn back RSI on later. All right. Okay. Right. Okay. So. Okay. Just take a note. Right. Forex Factory. Okay. I'm going to switch to GMT 0 so that we're all on the same page. Right, so from today till Friday, let's just do Saturday. Okay, so do take note, inflation, US CPI inflation data coming out 12:30 p.m. GMT on Tuesday 13th. FOMC release statement will be released, and the interest rate decision will be released at 6 p.m. GMT on June 14th, followed by the press conference at 6:30 p.m. GMT. Then we have the ECB monetary policy statement, right, coming out at 12:15 p.m. GMT on Thursday, 15th of June. And we also have, of course, the Bank of Japan with their statement release as well. Okay, it will definitely be on 16th of June, but the time is not fixed. The Bank of Japan usually doesn't disclose the exact time that they release the statement and policy rate update, but usually it does happen between 3 and 4 a.m. GMT, usually, right? So do take note of this on Friday, 16th of June, that BOJ will drop their release roughly between 3 and 4 a.m. GMT, or perhaps maybe even a little later. All right. Okay. All right. Hi, Tarek, tuning in as well. Thank you. Okay. So now that we've seen the main, or we've highlighted the main events for this week, let's see how where markets are currently. Okay, so let's start off with dollar index, and of course, please do drop your questions or requests in the chat box as well. If there's any currency pair that you'd like me to have a look at, we can go through it together, or you want to look at gold and oil as well. Yes, it's all right. Do drop your requests and questions in the chat box. Okay. Right. Okay. So this is dollar index. I'm on the 4-hour chart. All right. So we've had 3 strong weeks of dollar demand, which caused dollar index to surge higher. And the last 2 weeks, we've seen the dollar index hit a wall at about 104.50. It pulled back. Oops, sorry. It pulled back to about 103.45 at the start of June before bouncing higher back to oh, okay, wait, hang on, I think someone's okay. Okay, before bouncing higher to 104.39. Okay, so dollar as okay, sorry for this. Okay, let me see what any other. No, okay, I think this should be fine. Okay, hang on. Which can I use? Just give me a second. Sorry. Sorry, just give us a second.
Yeah. Yeah. Sorry, give me a second. I forgot the I forgot the password. What is the password to this? I no, it's okay. I logged out already. Okay, probably need to create a new chart. All right. Can I? All right. I'll go.
Right, hi everyone. Sorry. All right, okay, we are back. Okay. Yes. Okay. So you see the request coming in as well. Okay, for sure. We'll take a look at dollar yen, gold, and oil as well. All right. Okay. So once again, okay, 4-hour chart. Just let me remove the watermark. Okay, so sorry, as I mentioned, yeah. So the last 2 weeks, we've seen dollar run into uh, an overhead barrier around 104.50. It's been pulling back. pretty sharply. So we can see there was a what was previously, I guess, a ascending trend line here, which broke, and now I think we can just remove this just to keep it updated. We did have an intermediate resistance here. Previously, you can see the nice overlap in the past where it acted as support back in middle of March and then in resistance in middle of May and then again back as support. But now it's broken cleanly through this level. So of course we will remove this. Right. Okay. So far, okay, we've done the Fibonacci retracement on this upward leg. So the swing high from the bottom left going to the swing low from the bottom left going to the swing high. So when we do the Fibonacci retracement, okay, let's just pull all the fibs up so we can see exactly what we were looking at previously. So right, okay, so of course 23.6 and 38.2% are no longer valid, right? Because price has broken through this level, and 38 is about to be invalidated at this time. You can see previously uh, this level did act as a relatively decent area of support, where we had price bounce off last week at about 103.30, and this level also coincided with the 38.2% Fibonacci retracement. And if you zoom out a little bit, you can see that this level acted as a resistance at the end of March as well. But it looks like this level is going to be invalidated and is making a push towards the uh, intermediate support. Right, so dollar is looking weak during European trading hours. It started during to climb a little bit during Asia trading hours, but now we can fully see dollar the sell-off in the dollar resuming. So it's very likely, at least until tomorrow's CPI data, we're likely to see dollar index fall towards this intermediate support at 103. Right. Okay, what would cause the dollar to fall further, right? So, and that would mean DXY. So inflation, right? So we have, right? Sorry, this got removed. No worries. Let's just set it up. Okay. Right. Okay. So we have inflation data tomorrow, which will be the first major catalyst or market moving event for next for tomorrow. So we can see that the month over month CPI and core CPI data is going to be very important, both on monthly and annualized basis. So if inflation data comes in softer than expected, that means it's going to be lower than the forecast and also perhaps even lower than the previous month's reading. Then that would provide the catalyst for dollar index to fall lower. So as inflation cools, the Fed is less likely to be aggressive, and they may even, in fact, they may even pause at on the FOMC at the FOMC meeting on 14th of June, right? So do take note of how the inflation data is very likely to drive the direction of the US dollar going into the FOMC meeting. So if this comes in much softer than expected, we can definitely expect dollar index to break through this intermediate support at 103 and make a push towards 102.80. Conversely, if the readings come in higher than expected, we see inflation data sort of picking up again. Right, although year over year headline CPI data has fallen sharply, retreated very sharply. That's great news. But if you look at the core CPI reading, right? Okay, so how do we look at the core CPI reading? You can click on latest. Okay, so in case anyone didn't catch that, you click on the folder icon, go to latest release, click on that, takes you to the summary page. But what we are looking for is the link right at the bottom. So we can go to news release charts, click on that, and then look at the drop down menu. Look for 12-month percentage change, CPI, selected categories, 20 years, past 20 years, and we hit go. All right, so as you can see, headline CPI has been retreating very sharply. That's great news. But what has not been retreating as sharply is the core reading. And this is a similar phenomena that's happening throughout Europe and most other major economies as well. We are seeing this in New Zealand, Australia. no, sorry, Canada. Seeing this in Canada, Australia, most parts of Europe as well, and especially in America. So this uh, so-called reading of core reading is not falling as sharply as expected, and this is what is keeping central banks on their toes, and that is why they are not so eager to pivot so soon with regards to interest rate hikes, right? So even a pause now is in question, as we saw last week. We had two surprise rate hikes. The first off was the Reserve Bank of Australia, and then followed by the Bank of Canada. Right, it was widely expected that both of these central banks would keep interest rates on hold, but in fact, they actually raised them because core inflation was rising in their respective economies. Now, so that is why this fundamental data news event for tomorrow, US inflation, is going to be a key driver of where we can expect dollar to go. Okay, so do take note. Softer CPI reading is going to push dollar index down towards 103, and if it's already around here before that, and the news comes out negative for the dollar, it is very likely we'll see it drive further lower towards the first support at 102.80. All right, so. Uh, and then naturally, okay, then we'll transition into dollar yen and then into gold, because naturally, if the dollar index is falling, then of course we can expect the euro to rise, cable to rise, and of course dollar yen to very likely to pull back as well. So let's just quickly look at the euro. You can see here. Uh, the euro was in a bearish channel, is broken out of this channel and is now pushing higher. So, okay, let's do the euro first before we go to dollar yen. Okay, because as we know, the euro makes up about 57% of the dollar index basket, followed by the Japanese yen, which is 13%. So these two currency pairs make up 70% of the dollar index, right? The basket. So we have to so if the dollar index is moving up and down in a big way, it's going to have the direct impact on the euro and the Japanese yen. Okay, so let's just do a Fibonacci retracement on this move. So we take the swing high from the top left, go down to the swing low to the bottom right. So as we can see, the first retracement level at 23.6% resistance area was taken out in last week on Thursday, and then you could say it's sort of acted as a support area. But okay, but in terms of Fibonacci retracements, once the level has broken through, or price has broken through that retracement level, we can say that this level is no longer valid. Okay, but what we do still see is a nice overlap, right? The overlaps is still valid because we can see it acted as a support. The overlap of 1.0740 acted as a support on earlier today, acted as resistance in towards the end of May, and then acted as support back in the end of March, and again acted as resistance in the middle of March as well. So this is still a very good overlap level, which will now be acting as perhaps the first support level. Okay, and then but let's just clean this up, and let's just remove we'll keep 38.50, and we'll just and 78.6, we'll remove the rest. All right, so this will be our first support. In terms of resistance, let's look at where the first resistance is. Let's look for a combination of overlaps and perhaps alignment with the Fibonacci retracement, because when you have at least two or three different indicators that line up together, it gives us a higher uh, likelihood that this particular area or region is going to act as a significant level of support or resistance. Okay, so let's see, we've got 38 is here, but we don't really see any decent overlaps. If anything, I could say this could potentially be like a intermediate resistance. So I'm going to put this as a red dotted line here, so you can see it acts as a support here in early April. didn't act as support here, fell through, acted as some sort of resistance here in the end of May. And in early June, it came close to this level, but not quite, and pulled back. And then you can see it's acting as a resistance again. And also on today itself, it's again acting as a potential resistance barrier. Okay, so let's just keep this as an intimate resistance and try to highlight the next major resistance level. So this area here looks pretty good. As you can see here, it's acted as resistance here, support in mid-May, and support again as well in April. So should I yeah, I think somewhere around here is good. So I think this would be the first resistance level that sits just under the 50% Fibonacci retracement area, right? So we've got a good overlap that aligns close to the 50% Fibonacci retracement area. So I'll probably just highlight this area as well, right? To give us a first resistance area. And the second resistance area would looks pretty decent around 61.8% Fibonacci retracement level, because we can see here if we just go back to March, end of March, it acted as a resistance here. In end of March acted, oh sorry, and 23rd of March acted as resistance again, back right at the end of March. Then as a strong support in mid-April, before finally breaking through here in mid-May. So this is how we like to identify significant areas of support and resistance by a combination of overlap levels plus Fibonacci retracements as well. Okay, and for the second support, okay, would let me see if there's anything. If not, I think the second support probably would be this. Okay, the second support probably around here. This is probably good as well. Let's just see if there's any Fibonacci retracements to go with. Probably no. Okay, it's not a very big move. So I think, yeah, I think probably around here we could identify as the second support for now. Okay, so this is we're looking at the euro dollar on the 4-hour chart, right? So if price does break through this intermediate resistance here, we can potentially see it make a move towards the 38.2% Fibonacci retracement. So as I've mentioned earlier, the dollar is looking weak during European trading hours, right? And it's quite likely to continue going in as US comes online. Okay, so now we'll transition into dollar yen. Okay, so dollar yen, we've got a, a big move up here again. This is the 4-hour chart. We can do the Fibonacci retracement on this upward leg of the move. Okay, let's just pull up all the fibs once again. Okay, so 23%. The first potential area of support would be around a 23.6% Fibonacci retracement after making the swing high. But in fact, it did serve as a resistance because we see that it did bounce up higher after that, after touching this level. It broke through slightly below it before reversing the move to retrace higher, but it eventually broke down again. So this level of 23.6% is invalidated, right? So this is why we will remove it from our chart, and we'll just keep the 38, 50, and 61. Okay, we'll also just remove 78.6 and any other levels that are currently on. Okay, let's just look for overlaps. Okay, so what I can see immediately here in terms of support, we see a nice overlap support that started as a resistance back in the middle of May. So this is an area where I'll definitely highlight as my first support area, right? Resistance in middle of May, third week of May, and then a strong support at the start of June, and again a strong support last week on Thursday as well before rebounding higher. Right, so it's very, we can see that this level of 138.72 has acted as a very good support level for dollar yen. Okay, and for resistance, the first resistance, this area here looks pretty decent, right? We can see recently price being restricted at 140.24 on 7th of June, and also before that on 5th of June. And also when it was making this move higher, it did run into some resistance here on 25th of May. After breaking through it, then offering some sort of support here on 29th of May. Okay, and naturally the second resistance will take it at the swing high here. But let's just zoom out to see if there's anything else. Does there any nice overlaps that we could see potentially? No, it's a bit, no, nothing really lines up significantly. Okay, maybe you could argue that second resistance does is a major overlap support as well, because we can see price reacting off this level here. So if, let me just drag this up around here. Yes, right. So you can see price running into resistance back in September of 2022, pulling back before breaking higher, and finally acting as a support towards the end of September. Broke through these levels a few times, but now it's beginning to act as a resistance uh, in the current context. Okay, so this is how we've done. Okay, and second support, let's see, where would our second support be? What looks pretty decent? Yes, as you can see, right? I think you guys will be able to highlight this, identify this level of is my sorry, okay, this level of 137.71 is a significant support area, right? We see acting as a resistance in early March, acting as a resistance in early May, before breaking out and finally acting as support on 22nd of May. And this lines up just above the 50% Fibonacci retracement level as well, right? It's in between the two levels, but yeah, we would like to use the overlaps as well, because you can really see serious supply coming into the market here, right? In terms of selling pressure, right? And also we saw significant demand coming into here. So that is why we can say that this overlap support is a significant level, and it would probably, and if price breaks through the first support and drops towards the 38.2% Fibonacci retracement, it is very likely to break through this 38.2 and come to the second support area, where it should find uh, strong buying demand around here. Okay, so similarly, if we see softer CPI data coming in tomorrow evening, then tomorrow after, depending on your time zone, it's quite likely, of course, dollar yen is going to break through 138.72. All right, and naturally, and of course, yeah. So, and if it comes in, uh, especially if the core reading comes in hot, then we could see it. If it price didn't break through this level already, it's going to definitely bounce off here to make another push back towards 140. Okay, so this is dollar yen. Okay, now we'll go on to gold, because naturally, if dollar index has been pulling back over the last 2 weeks, then definitely this acts as a tailwind for gold prices. Right, so gold prices are a function of, just basically are a function of the value of the US dollar and the level of the US government bond yield. So when you see an environment where dollar index is rising sharply, and you also see government bond yields rising together, this is a negative tailwind for gold prices, and will cause it to pull back very sharply, is what we've seen over the last 3 weeks, right? Starting of May, at the start of May, all the way till the end of May, so almost 3 to 4 weeks, we saw gold in a bearish channel heading down here. And also, I'd just like to zoom into the daily time frame and just highlight a key resistance area as well, right? Okay, so if you look here, since right? Since oops, August of 2020, the region between 2040 and $2080 per ounce has acted as a major resistance area. We've seen immense selling pressure come into play whenever gold prices, spot gold prices have come into this area. And it happened again in March, right? Right after uh, the invasion, or not right after, but a few weeks after the invasion of Ukraine by Russia, right? A major geopolitical event which sent gold prices soaring higher. But as soon as it came into this region of 20,050 to $20,070 per ounce, we saw price pull back uh, quite sharply as well. All right, hi, good morning, Amar. Thanks for joining us today. Right, so you can see, and also once again clearly in early May, earlier this year, or I mean just last month, once again price capped out at $20.78 per ounce. So you can see this is a very obvious area, or very obvious overhead resistance barrier. So do take note of that. Keep it in mind that should gold prices rebound to come higher, right? It's quite likely we are going to see major resistance from $20,050 per ounce onwards. Okay, right. Okay, let's do a Fibonacci retracement on this downward part of the leg. Okay, this I guess you could probably use this as well, maybe, because what I don't like is, okay, when we do the Fibonacci retracement, right, the trend line should match the price structure quite cleanly, right? So what do we mean by that? So as you can see from 10th of May onwards, the trend line does capture the price structure very clearly, right? All yes, there is a bit of deviation away from the trend line, but it's not so obvious. Except, but if you look at the earlier part, this part here, it does seem like there's a lot of deviation. So let's just see on the daily time frame and see how does it look on the daily time frame. If it doesn't look too bad on the daily time frame, it is still alright. But you can see the trend line captures this part of the move very cleanly, matches the price structure very closely. But this part is uh, is actually, there's quite a big deviation here. So generally, at least for me, I would probably use this swing high here and use this swing low to draw my Fibonacci retracement, because you can see here the trend line does capture the price structure more precisely. Okay, so this is how I would do the Fibonacci retracement for this downward leg of the move, right? Okay, so now we are back on the 4 hour time frame. Okay, so let's just pull up all the fibs once more. Right, okay, so once gold prices had made the swing low here, it's rebounded off $1,930 per ounce. It did run into some sort of resistance over about 1 day, right? When it hit 23.6% Fibonacci retracement, it did find some headwind around here before breaking higher slightly, pulling back, and then finally finding resistance again at 38.2% level. Okay, but as we mentioned earlier, once price breaks through a certain level, that level is no longer valid. So we're going to take that off. We'll keep 38.2 just as a guide. Also, actually, technically 38.2, because it has broken out here. Technically, we could still say that this is invalidated, but let's just leave it on so that we get an idea of where it is. So I think we'll just keep 38, 50, and 61. Right, so that's what we'll do. Okay, right. So in terms of immediate resistance, yeah, probably this level here, just above the 38.2% Fibonacci retracement, is probably a good level. So not only has it acted as resistance here in May and in early June, we can also see it has acted as a fairly good support level here in April as well. Okay, so I think I'll just pull it around here and label this as our first resistance. So you can see strong support from mid-April all the way till early May, relatively strong support, and then acting as resistance in 22nd of May, 24th of May, and also most recently at the start of June. Okay, so this is where I would identify the first resistance level that sits okay, it sits closer towards the 38.2% Fibonacci retracement. Okay, now for support, I think yes, if you look here, right, we are able to see a fairly good support area as well, right? So prices acted as a support here in the early April. So $1,950 per ounce is a key first support area, right? Support back in early April, support back in mid May, again on 23rd of May as well. Didn't touch the level but came very close to it before, bouncing to go higher. And of course, it broke through it in the past. It eventually broke through it, and now it is potentially the next significant support in the current context. Okay, so and in terms of second support, right, we can see here this is a this level at $1,936 per ounce is potentially the next. Oh, actually, even if I pull it all the way back here, yes, you can see resistance, support, support. Okay, so this is how we'll identify the support and resistance levels for gold. So naturally, if dollar index is selling off today and tomorrow, and it's quite likely we can see gold prices push towards $1,970 per ounce, and perhaps even up to 1,900 and what is this 75 as well, right? So do take note of that. The dollar has been selling off for the past 2 weeks, and it looks like it has resumed again, which should put create a relatively strong tailwind for gold prices. Okay, and just let's just before we go on to oil, and then we'll go on to Aussie cat as well. Yeah, Bester has a request for that. So from gold, we'll move on to oil, and then finally into Aussie cat. Let's just quickly try and identify the second resistance area. So probably around this level, close to the 61.8% Fibonacci retracement is. I'm still not sure about that. Okay. Yes. Okay. So we this right. So we can see here in the past is acted as a resistance on 23rd of March. Then between towards the end of April, acted as a resistance again. Then here we have a couple of instances where it acted as a support, right? So I think this is probably a level that we can identify as a second resistance area. And if I zoom out a little bit more, yeah, probably see you can go all the way till here, right? So I think this is a pretty good level to identify as the second resistance. Okay, right. Okay, now we'll just go on to oil before we go to Aussie cat. Okay, so oil, right. So we had the first, maybe just start off with a quick fundamental uh, overview. So we had the first big production cut led by Saudi Arabia and its OPEC Plus members at the end of March over the weekend, right? Then prices gapped higher. Crude oil prices gapped higher. WTI went as high as 83.50 or even more per barrel before pulling back significantly. And also again, last weekend as well, we had another round of surprise production cuts. But however, this time this was only led by Saudi Arabia. The other OPEC Plus members did not pledge any further cuts. So as you can see, because of that, prices quickly closed the gap, pulled back, and retraced a little bit higher before going down again. So basically, because the outlook for the second half of the year for the global economy is not so great, Generally, the forecast coming out for major economies is economic activity is is likely to slow down. So if you have economic growth slowing down, there's less demand for crude oil. And also last week's China's trade balance data was quite poor as well. Trade balance, the surplus fell, and they also had their imports and exports falling as well. Right. So when you have China's exports falling, that means that signals uh, slower demand or less demand from the external economies or the rest of the world. And when you have the second largest economy in the world lowering its imports or registering lower imports, that means domestic consumption is slowing as well, right? So that means the demand for crude would be lower overall because of China, because of the global economies as well. So that's why it is currently there's a lot more headwinds for crude oil than tailwinds. Despite the despite the surprise production cuts, we are seeing a lot of overhead pressures on crude oil prices. But do take note that this level of $67.80 is a key support level because you can see prices have reacted, bounced off this level quite strongly, almost you could say probably now four times. First here in March, then again on 4th of May, 31st May, and even as recently as today as well. All right, so I think this is a very good area to identify the first support level for WTI. And then if you just zoom out a little bit, perhaps the second support we could probably label it around uh, the swing low of here of 20th March. Let me just see if there's anything else I can overlap it with. Yeah, okay, so probably all the way till November of 2021. So we can see a decent overlap here as well. Oops. Okay, so this is our support areas for WTI oil, second support, first support. Okay, for this example, I'll just use overlap support first and then we'll do the Fibonacci retracement later. So you can also see that you can also identify key overlap supports and resistance areas without pulling the Fibonacci retracement as well, right? It is very obvious in price. You can see it very clearly and we can identify the areas as well without looking at Fibonacci retracements. Okay, so in terms of resistance, let's see, we can see probably here, yes, this level here. Probably around here. Okay, maybe I'll just keep this right just here, right? So we can see why would this be a good first resistance level, because you can see price bounced off here after falling down from 76.70 per barrel all the way down to $71 per barrel. Price found some support here, traded, bounced higher for about a day before breaking lower, then finding resistance here on 23rd of May, and then of course it went higher. We had the big gap up and the gap closed and broke lower. Then you could see it's acted as a support level on 22nd of May, support again on 25th of May as well, and then 6th of June. Although yes, the wicks did extend beyond, but it did offer some support in the past. So that is why we will identify this as a first resistance area or level, and the second resistance level, what looks good is somewhere around here as well, 74.12 per barrel. You can see resistance in May and in June, support in mid and the end of April, and also support around February as well. So probably somewhere around here, right? So this region would be our second resistance. Okay, now that we've identified the resistance levels and support levels based on overlaps. And we've also identified the backdrop, the fundamental backdrop for oil price for oil. But of course, despite the gloomy outlook, there can always be potential for bounces, right? As short traders close out their positions, we can have a phenomena of short covering taking place because naturally the short sellers would need to buy out their positions to close, to buy out the position to close their trade. So that would see a potential retracement in the prices of crude oil as well. So do watch out. That 67.50 is a key support level, which may trigger a short-term bounce in oil prices. Okay, so let's just do the Fibonacci retracement here from this swing high to this swing low. Okay, so for this, and we'll do all the Fibonacci retracements. Okay, so 23.6 and 38.2 are no longer valid. 50 and 61 naturally would still be, so let's just keep those. Right, okay, so we can see the 50% Fibonacci retracement level lines up nicely with the second resistance level as well. So this is I guess a double confirmation for this to be a significant level of resistance. And we can also see the 61.8% Fibonacci retracement level acting as a decent resistance and support from April to early May as well. Right, and we zoom out a little bit. No, there's no really nice overlap, but over here, this region is also a pretty significant uh, area of resistance as well. Okay, based on overlaps and the Fibonacci retracement. Okay, so now we'll just move on to Aussie Cat. Okay, so let's go. Okay, Aussie Cat is not a pair that I look at. I guess in detail, but of course we can of course still do technical analysis on this currency pair. Okay, so usually I always like to start off with the daily time frame to see where we are with this particular currency pair. So as you can see, since January of this year, Aussie Cat peaked at about 0.95.40 and has been trending lower. So yes, it's been in a bearish channel for most parts of the year. But now we can see a swing low and a very strong bounce higher, right? So we've seen a lot of demand coming in for the Aussie dollar versus the Canadian dollar over the last few days, right? Yeah, last couple of weeks. Okay, let's do the Fibonacci retracement first. All right, take the swing high, top left to the swing low, bottom right. We got all the fibs here. You could also say there was a bearish channel. Okay, let's just see if we can. Where is it? Yeah, okay. Previously, the channel would probably be here, but now obviously it's broken out of it. Yeah, okay, so you could say generally there was a bearish channel here that finally got broken out of in second of May. Okay, so yes, price was in a bearish channel going down. Yeah, probably this would be yeah. Okay, but now that it's broken out, let's just remove this channel. Okay, and let's try and identify support and resistance areas. Okay, so naturally the first support would probably be around where the swing low, the recent swing low occurred. So let's see if it lines up as well. Do we see any nice overlaps? Probably not. Probably here. No, not. You can see probably here. We do see an overlap here. Strong overlap support here. A little bit here. Then finally breaking out. But okay, maybe let's just identify this as the first support level here. Okay, because the other that level was probably a bit too far. Okay, maybe, and then first resistance seems to line up pretty well with the 38.2% Fibonacci retracement. So you can see here there's an overlap here in terms of resistance in April, and some support here in the end of December, and resistance here in August of last year. So I think this would be a generally a good area to identify as the first resistance for Aussie Cat. Second resistance doesn't line up well with any Fibonacci. Maybe I would use this around this level here as the second resistance. Okay, second resistance at dot 92.27, close to the 61.8% Fibonacci retracement, and we have the first resistance at dot 90.75, which lines up almost in line with the 38.2% Fibonacci retracement. Okay, the largest okay, because we've already broken through, price has broken through the 33.6% retracement. Let's just remove that. We'll just keep 50 and 61. Oh, sorry, 38.2 and 61. Okay, I'll just do this and I'll add 38. Right, okay. So now let's just zoom in onto the 4-hour chart and see where we are. Okay. And see, okay, so we can see some intermediate resistance support perhaps as well. Right, okay. You can also do a Fibonacci retracement on this leg of the move. We, although this part is not made a confirmed swing high yet, but perhaps just to get an idea of where support levels could be, potentially maybe something closer. If you're looking for support level that's closer, you can see that yes, price acted as a resistance here, as a support over here, and support here as well. Right, you could potentially identify this as a closer level of support. Yeah, see, it can even go all the way back to around here. Okay, so not okay. So we do have a instance or multiple instances where price has reacted off this level. So if you would like something closer to identify as a closer level of support, it'll probably be around dot 89.70. Okay, and then for resistance, I think from here, yeah, it's about what 40 pips. I think that's fine. I think from here to here is 40 pips. I think that's fine. And then from current price levels to down here, also it's about another, yes. It's okay, 60 pips. Okay, okay. Yeah, so I think for Aussie Cat, okay, as I said, I'm not too familiar with this currency pair, but based on what I'm seeing, it is definitely in a bullish channel, right? Aussie is definitely much more in demand than dollar than the Canadian dollar, and it's going to is quite likely to push higher as well, right? So we've seen that this is a bullish channel as well. So let's try and see if we can. Oh wait, what am I doing? Hang on a minute, sorry. Right, okay. So you can see it is in a nice bullish channel, and if price were to continue to go higher, right, we may run into resistance around dot 90.50 and start to pull back a little bit before going higher as well. All right. Okay, I'm coming close to the end of today's session. Are there any more requests or questions that you may have? Otherwise, if that's it, then yeah. So please take note of the key events that are coming out this week. Okay, so we have CPI, US CPI data tomorrow, 13th of June. We have the FOMC meeting on the 14th of June, followed by ECB interest rate decision on the 15th, and finally Bank of Japan on the 16th as well. All right, so do take note of these key events because they'll definitely be major drivers for currencies and gold this week. Right? Okay. Thank you everyone for tuning in. It's been my pleasure and a great time, and I'll catch all of you at the next session. All right. Thank you very much. Have a good trading week. Take care.